What are the purposes for valuation? Now, the purposes for valuation can be put into four different categories. So you have valuation can be done for transactions, or they can be done for the purpose of compliance, or they can be done for the purpose of financial reporting, or they can be done for the purpose of litigation. And I'm sure as I discussed these purposes with you, you would realize as to what kind of scope is there as far as the valuation is concerned. So, what kind of transactions for which we may require valuation? So, it can be corporate restructuring, it can be merger or amalgamation, IPO, buyback, buyout, sale or purchase of asset, tangible as well as intangible. It can be a transaction of management buyout. It can be a transaction of management buy-in. It can be a transaction of reverse merger, recapitalization, participation by a new investor, leverage buyout, disinvestment, ESOP, or project planning. So, under all these transactions, one will have to arrive at the valuation. As regards the compliance, the valuation can be compliance under FEMA or transfer pricing under the Income Tax Act or under any other provision of the Income Tax Act or compliance with the regulations of different regulations of SEBI that we are going to discuss in any case together. And it can also be for planning, estate planning, personal financial planning, strategic planning, M&A planning, or Wealth Tax Act. As far as the financial reporting is concerned, the valuation can be for impairment testing. We all know the impairment testing. So, any asset whose book value or whose value in use whose book value has gone down lower than the value in use means there is an impairment. So, for the purpose of impairment testing, also we are required to do the valuation as per Ind AS 36, which is on impairment of assets. Mandatory requirement definitely for those companies where Ind AS has become mandatory. Then, of course, under Ind AS 103, purchase price allocation or fair value reporting under Ind AS 113. It can be for tax issues, strategic valuation, or identification of under and overvalued assets. So, in share market, when somebody is dealing in the share market, or it can be otherwise also, you would always be interested as an operator to identify the assets which are overpriced or underpriced so as to take a decision about buying or selling those assets. For litigation, the transaction can be a bankruptcy, it can be shareholder dispute, it can be marital dissolution, or it can be intellectual property dispute, it can be ownership dispute, contractual dispute, dissenting and oppressing shareholder cases. So these are the different purposes for which valuation will be required either under the Companies Act or under the Income Tax Act or under the FEMA or under the SEBI regulations or under any other regulation for that matter. So these are the purposes for which the valuations are done.